Wall Street is still grappling with President Donald Trump's trade actions. The stock market was down again today after a disastrous Monday on Wall Street, which economists called the worst day for the U.S. market so far this year. Here are the numbers. The Dow dropped nearly 500 points, or about 1%. The Nasdaq fell 0.18%, and the S&P 500 dropped 0.76%. This comes after even steeper drops yesterday. It was the worst day of the year for both the Dow and the S&P 500. The Nasdaq says its biggest single-day decline since September 2022. This as the Trump administration continues with his on and off again tariffs.
We're going to take in hundreds of billions of dollars in tariffs, and we're going to become so rich.
President Donald Trump announced another round of tariffs on Canada this morning before reversing his decision this afternoon. The president said he would have doubled the tariffs on Canadian steel and aluminum from 25% to 50%. The president's decision to halt those increases came after Canadian officials lifted retaliatory tariffs they issued that would have raised energy prices for some Americans near the border. Meanwhile, Chinese officials slapped a 15% tariff on American agricultural products like chicken, wheat, corn, and cotton. The roller coaster of tariffs policies is sparking concerns about a recession.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big.
JP Morgan Chase analysts have revised their recession forecasts in recent days. At the beginning of the year, analysts predicted there was a 30% chance of a recession. Now it's 40%. And stockholders are watching the news about tariffs and the market closely, concerned about where it's going and what to do next. News 5's Peter Choi spoke with a local financial advisor for his perspective.
Well, take a look at this for a second. So as of Tuesday, when we look at Dow Jones and Nasdaq, the numbers were showing downward trend, and stockholders tell me they're worried about this trend right now. But one financial advisor tell me, don't push that panic button just yet. As Wall Street goes through a rocky start in 2025, some stockholders
I've been investing for about the last 10 years.
Are feeling the pinch, especially when you're investing not a lot, but
$10,000.
not a little either.
This is what I use for financing, like some personal projects and whatnot.
Okay, let's hold for a second. What about stocks? Why are they so worried about when stocks are going down? Well, let me tell you. Stocks are a share of ownership in a company. Based on the company's value, stocks will rise or fall. And when you see numbers going down, it's a bad day for stockholders.
I feel a lot of uncertainty.
There's a tremendous amount of uncertainty with this trade war.
So this financial advisor's suggestion to his client right now is...
What you don't want to do here is react. You can respond to this by doing your homework on your personal situation.
Because he says based on his more than 2-decade experience in the industry, the current situation in stock market is not surprising.
We're down 6%. Stock market corrects 10% every year and a half. So this isn't abnormal. What's abnormal is the administration's policy and what they're putting out there. Does it surprise us? No.
Watching the market closely is what he's going to do for now.
I'm hopeful that things will get better with time. A lot of the stuff I've invested in is really long term, so I'm holding as hard as I can.
Peter Choi, News 5.